if I told you that every time you swipe your credit card, someone is making money, even if you never pay a single dollar in interest? And what if I told you that the world's largest credit card companies have built one of the most profitable money-making machines in history, earning billions from people who think they're using the system, while the system is actually using them? Most people believe credit card companies make their money from late fees and interest charges. But that's only part of the story. Behind every swipe, every reward point, and every cashback offer lies a sophisticated financial engine designed to generate enormous profits. And once you understand how it really works, you'll never look at your wallet the same way again. If you enjoy business, money, and hidden wealth stories, make sure to like this video and subscribe to the channel, because the truth is, some of the biggest opportunities are hidden where nobody is looking. Credit cards are so common today that most people barely think about them. Millions of Americans use them every day to buy groceries, book vacations, order food, and pay bills. They feel simple, convenient, almost invisible. But hidden beneath that convenience is a business model worth hundreds of billions of dollars. The fascinating part is that credit cards weren't originally designed to become financial giants. In the early days, they were little more than charge cards used by wealthy customers at select businesses. The concept was straightforward: buy now, pay later. Nothing revolutionary. Then something changed. Banks realized that if they could convince millions of people to borrow small amounts of money continuously, they could create an endless stream of revenue. Instead of lending money once, like a mortgage or car loan, they could lend repeatedly, every single day. And that simple idea transformed the entire financial industry. Today, companies like Visa Inc., Mastercard Incorporated, and American Express company process trillions of dollars in transactions every year. But here's where things get interesting. Many people think Visa and Mastercard are the ones lending money. They're not. In reality, Visa and Mastercard operate something even more powerful. They built the roads. Banks drive the cars. Every time a customer swipes a card, multiple players participate in the transaction. The customer buys something, the merchant accepts the payment. The bank provides the credit, and Visa or Mastercard processes the transaction. For doing almost nothing visible to the consumer, they collect a tiny fee, just a fraction of a percentage. Sounds insignificant until you realize they're processing trillions of dollars. A tiny slice of an enormous pie becomes an enormous fortune. But that's only the beginning, because the real money often comes from human psychology. Think about this. If you hand someone a $100 bill, they physically feel the loss. The money leaves their hands. There's friction, pain. When someone swipes a card, that pain largely disappears. Researchers have repeatedly found that people tend to spend more when using cards compared to cash. The transaction feels less real, less immediate. Credit card companies understand this perfectly. The easier spending becomes. The more transactions occur, the more money flows through the system. And every transaction creates revenue. But the biggest jackpot comes from something else entirely: interest. This is where billions become tens of billions. Imagine a customer buys a new television for $1,000. If they pay the balance in full at the end of the month, the bank earns relatively little. But if they carry that balance month after month, something extraordinary happens. Interest begins accumulating. Then interest accumulates on interest. And suddenly that $1,000 purchase becomes significantly more expensive. Now multiply that by millions of customers across the country. The numbers become staggering. Some credit card interest rates exceed 20% annually. That's far higher than many other types of loans. Why? Because credit card debt is unsecured. When someone takes out a mortgage, the house serves as collateral. When someone finances a car, the vehicle serves as collateral. But with a credit card, there is usually nothing to repossess. That additional risk allows lenders to charge much higher rates, and higher rates mean higher profits. But here's the clever part. Credit card companies don't necessarily want everyone drowning in debt. That would actually be bad for business. Instead, they prefer a balance. They want customers borrowing enough to generate interest, but not so much that they stop paying entirely. It's a delicate dance between convenience and debt, and they've become incredibly skilled at managing it. Then come rewards. Programs, cashback, travel points, airport lounges free, hotel nights. At first glance, these perks seem incredibly generous. Some cards practically throw rewards at consumers. But here's the question: how can companies afford to give away so much free stuff? The answer reveals another hidden layer of the business model. Every reward is carefully calculated. Credit card companies know that rewards encourage spending. The more customers spend, the more transaction fees they generate. Many consumers even spend extra money simply to earn points. A person chasing rewards might buy things they never planned to purchase. From the company's perspective, that's a win. The rewards aren't expenses, they're investments. And those investments often generate far greater returns than they cost. Then, there are merchant fees. This is one of the least understood parts of the industry. Every time you use a credit card at a business, the merchant usually pays a fee for accepting that payment. The customer rarely notices. The fee is hidden behind the scenes, but merchants notice a lot. For businesses operating on thin profit margins, these fees can be substantial, yet most merchants accept them willingly. Why? Because refusing credit cards could drive customers away. Consumers expect convenience. Businesses need sales. Credit card networks sit directly in the middle, collecting revenue from both sides. It's a remarkably powerful position. But perhaps the most impressive part of the industry is risk management. Think about how incredible this system actually is. Banks are lending billions of dollars to people they may never meet. Some borrowers will lose jobs. Some will face emergencies. Some will default. Yet somehow the industry remains enormously profitable. How? Data, massive amounts of data. Every payment, purchase, balance, and transaction helps build a financial profile. Sophisticated algorithms analyze risk. Continuously, they predict who is likely to repay, who might miss payments, who could become a profitable customer, and who represents too much risk. In many ways, credit card companies aren't just financial institutions, they're data companies. Information allows them to make smarter lending decisions. Smarter lending decisions create more profit, and more profit fuels growth. But there is one final secret that makes this business model truly extraordinary: scale credit. Card companies don't need to make thousands from each customer. They only need to make a little from millions of customers. A few dollars here, a transaction fee there, some interest payments, an annual fee, a late payment charge. Individually, these amounts seem small. Collectively, they become one of the most lucrative industries on earth, and that's why credit cards have become so deeply embedded in modern life. They're not simply payment tools. They're sophisticated financial ecosystems designed to generate revenue from multiple directions. Simultaneously, the lesson isn't that credit cards are bad. In fact, when used responsibly, they can be incredibly useful tools. They offer convenience, security, fraud protection, and valuable rewards. The real lesson is understanding the game being played, because once you understand how the system works, you can make smarter decisions. You can avoid unnecessary interest, use rewards, strategically build credit responsibly, and prevent yourself from becoming the product instead of the customer. Looking ahead, the industry is likely to become even more powerful. Digital wallets, artificial intelligence, real-time payments, and personalized financial products are already changing how people spend money. The technology will evolve, the methods will evolve, but the underlying principle will remain the same. Make spending easier, increase transaction volume, capture a tiny percentage of enormous amounts of money, and when billions of people participate, tiny percentages become giant fortunes. The next time you pull out your credit card, remember this: you're not just making a purchase, you're participating in one of the most successful business models ever created, a machine so effective that it quietly generates billions of dollars every year while most people never notice it operating around them. Good luck. Until next time.